Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free weekly video report for Wednesday, March 14th, 2018. I hope you guys are having a great trading week, and let's get started. So I shared with you the morning notes that we sent out today, and really what they were looking for was we turned into a sell the rally mode. And what I was explaining was you really have three different options. One is buy the dip, two is sell the rally, and the third one is just do nothing. You just sit and watch because there's nothing that's really giving you any type of trading advantage. So we turned into the sell the rally mode because one, we went into one of our turn dates. It's not the important one. That one is still upcoming. But what we were really waiting for was for some bearish divergences or for some sell signals, and we got those. And then, what we really do is you just start, you move into the short rallies, and you do that at resistance zones. And they've been following the resistance zones really, really nicely. And the 2778 was the exact high, and that was actually the what we were looking at as far as the top in the morning. And if I just show you the notes right here, this was the range 2778 to the low 2757. Now the way this works is if it went above this level, then you start looking at the next pivots above that, and then below it, this is where we start looking at lower levels. So it was we were in a short the rallies. I would try to short this at the 2779, 2782, made it up to 2778. So it was pretty much right there. It was pretty good information that people were able to trade on. And again, really this works off of time, sentiment, and technicals. And the time wise, we've been anticipating and telling everybody from down here that we were going to get a bounce, and it was going to last into the March time period. And we came in, the turn date was Friday. We did have a big spike, and it went above it, but that doesn't make things it didn't make things more bullish. But we really weren't bearish because when we were heading up here, we didn't have any bearish divergences. So when we go back to this, time wise, it was on the bearish side. Friday gave us the sentiment part of it, and if I show you the sentiment chart, that's when we got the 99%. So then what we do is you wait for the technicals, and again on Monday or Tuesday, it was the 13th. So basically what happened was we made a higher high. That gave us the bearish divergences. And again, if we go back to the formula, time, we knew we were heading into a bearish time period. Sentiment, we got the 99% bullish sentiment. And then technicals, we had the bearish divergences, and we ran right into a resistance zone that we've had here for a very, very long time. So that gave us the sell rallies mode, and that's really how our service works. It's not we're not fortune tellers. We're not making these predictions out of the blue. You use these three methods, and more times than not, you're going to be on the right side of the trade. And again, they're not going to be right 100% of the time, but that's why you put stops in place, and we do that off of price. And if you get stopped out, it doesn't mean you switch to the other side. It means you move to that neutral stage. So you remember, you have buy tips, sell rallies, or do nothing. When you get stopped out, whether it be on the upside or the downside, the market didn't turn, it didn't pay attention to the technicals, it didn't pay attention to sentiment or the time. So you don't switch, you just kind of move to the neutral end until you see a price start to move the other way for the reversal. So the on Tuesday, what I had said was that I was waiting for the S&P to make trigger some sell signals. We got them, and what I said was that below 2779 will warn that a pullback has started. And if you see selling pick up, and we want to see how the bulls react at 2760 to 2750. So again, if we go back to the chart today, we made it. We were at the 27 2750 area. It moved below it and then came right back. So we're right at the pivot point right here, and if it moves below that, most likely we're going to see a very quick move. We have some support right at the 2732, and then the 2723, and then we also have the 200-day moving average that's at the 2718. So we have some support right here, but once this starts breaking, that's when we start seeing you know, some people start to scratch their head, because remember, everybody got bullish on the market up here, just like everybody got bearish on the market down here, as everybody was bullish on the market up here, and everybody was extremely bearish on the market here. So if you follow the sentiment and you know which way everybody is leaning, and I say this all the time, and you know, the market's going to do everything possible to catch the majority on the wrong side, and you know, knowing where sentiment is, it gives you that advantage of, you know, which way is the herd leading, and then from there, as long as we're running again into a time period that we're expecting the reversal, then you just wait for the technicals, and again, it works. You find yourself on the right side of a trade a lot more often than you do the wrong side. So anyway, so the bulls kind of reacted at the 2750. We went a little bit below it, and we came right in, you know, closed right at it. So again, we have sentiment that's here. I'm sure, you know, tomorrow in the report, we're probably going to get a little bit of a lower sentiment, but that's actually what's been predicting right here, is we're looking for sentiment to start coming down. So that's really what we're looking at right now. And, you know, from a technical end of things, if we look at the daily chart, now, what, you know, originally I had this as a wave 4. This was the complete, and we're going to make new highs. Again, it all goes to, you have a plan A, plan B, and plan C. When you're down here, you know, if you're making a trade for new highs, that's just silly. You're gonna get crushed. Just like you have your plan A. My plan A was that we had a chance of coming up and making a wave 5. Plan B was that it was an A, B, and we were going to come down and make a wave C, and then that would be the wave 4. And then you have a plan C, where you have your wave A, and then you have an A, B, C of a B right into resistance. And now we could have a chance of coming all the way down to the 2743. Now, why do I say 2473? Because if we look at the high here, which was the 2801, and then we look at the high here at 2876, this is duplicated. And all I did was match it down to the bottom here, and you can see, as far as the distance from that it missed on the high here, if it follows it to the downside, it matches up almost perfectly with the 38% retracement and this support zone right here. So if momentum picks up on the downside, most likely we could see this next move bring us all the way down to the 2473, and that's one of the reasons why I haven't really been too you know, I didn't have to be perfect on the upside trade, and just because I know the amount of points that it could bring to the downside. Now the panic starts when we take out the 2642. Right now we're kind of just jockeying around, and if I show you right here, this is the bearish wedge that I was saying that we had a chance of coming up here, and I'm still not ruling it out. We got to see some support levels really break before this plan is out the window, and really what it's going to be is a break of this 2702. If that happens, we're going to break the wedge. But then what happens is, if it pops back up, you look to short at resistance. But the target for this particular move is coming all the way down to the 2580. Now remember, where's the panic line? The panic line is going to be when we take out this 2644. So again, 2580, we're down at these levels, and I don't think there's going to be a whole lot of people that are buying, which then again opens the door for this. And again, it's a plan. Can that plan change? Absolutely. You don't get married to anything. You know that you have time on your side as far as with the short side, and it should pick up at our next turn date that we have that's approaching. That if you guys don't know what it is, you really want to pay attention to it, because if you miss it by a few days, unfortunately, these are the types of moves that are happening, and it's another clipper that Woody is anticipating, and this took 2 days to wipe out a big part of the gains that we had going here. everybody remembers this right now. So if we start coming down, it could pick up even more to the downside if that happens. But again, that's just a plan. If we hold this support right here and we head up, then I leave the door open for the move to still come back up to this level. It's you have your plan and you adjust to it. And the thing that the bulls have to do to try to get themselves out of the woods right now, the first obstacle is going to be get it above this the 2763, as well as the 2766, which is the moving average. If they get above that, then they're going to have to handle this resistance again at the 2779, and that's pretty much where we were today. So we have some really, really exciting times coming. I keep telling you that. There's going to be money to be made on both sides. Anybody that we used to hear about how we're only bearish on the market. We've been bullish really since 2.9, and now it's time to switch hats, and this is what we're doing. We trade both sides of the market, but sometimes the markets just get boring. Nobody needs to and doesn't really need any type of information because the market's just going up. But when you start getting these moves, you need the information, and you really need it from somebody that's been doing this for over 40 years and has some of the largest financial institutions in the world that follow them. And again, paying attention to the sentiment is going to be key to this. So with that, until next week, have a great night, and I'll see you guys in the morning.